Welcome to Illuminati Silver. We tell you the truth about silver. Yesterday, the Federal Reserve raised rates by 25 basis points. Today, we have the European Central Bank raising rates, and on May the 11th, the Bank of England raising rates. What's going to happen? Let's take a look. Yes, indeed, the Federal Reserve raised interest rates yesterday by 25 basis points, now making the Fed funds rate, or what we commonly know as the base rate in America, now ranging between 5% and 5.25%. Now that is 500 basis points higher than it was 14 months ago, because during that time we've had 10 consecutive rises in interest rates. Something not that palatable for most people, particularly with mortgages, whereas depositors who have banks in interest-bearing accounts will feel a little happier about that. But hey-ho, the majority of people are borrowers, not necessarily savers, certainly not of any significant sums of money. Now, we also have the European Central Bank due to make its decision on interest rates, and the Bank of England next week on May the 11th. But it does look, certainly from listening to Jerome Powell yesterday, certainly appears that rates may now pause for a while until the incoming data suggests otherwise. I think the bank feels that we've now reached that sort of level beyond which would only prove detrimental to economic growth and recovery. And Powell did seem to suggest that the recession that many people have been predicting may not now actually occur. Now, we'll have a quick look at a few articles published by Bloomberg and by Reuters. But before we do that, just a reminder that tomorrow we have the prime employment data, which used to be called the non-farm payrolls, which hopefully will support the view that Jerome Powell adopted, that the economy is robust, but that interest rate rises have had an effect. Let's take a quick look now at some of the news articles, and then I'll talk to you about how the markets have responded. Okay, main headline on Bloomberg this morning: pound hits 11-month high as traders brace for Bank of England to diverge from Fed. UK economists expect just one more quarter-point rate hike from the Bank of England, even though inflation is stuck in double digits. Yes, because unlike the United States economy, we have in the UK inflation at 10% or more, whereas in the US it's 5%. And investors are bracing for a round of increases lasting through the summer. A survey of economists by Bloomberg showed most anticipate the key rate will rise to 4.5% on May the 11th and then remain on hold, pausing the most aggressive cycle of increases in 4 decades. ECB set to slow hike pace after core prices ease. Deposit rate to be raised to 3.25% from 3%, according to economists. Investors are looking for signs of how many rate increases remain. Now, the European Central Bank is going to make its decision today, and it says that basically tighter lending conditions weighing on the economy, officials will raise the deposit rate by just a quarter point to 3.25% on Thursday. A bigger move cannot be ruled out, however. A minority that includes JP Morgan Chase and Bank of America reckons officials will opt for a 50 basis point step as underlying price gains still far exceed the 2% target. Okay, there does seem to be a consensus that perhaps most of the central banks are now about to reach their peak in terms of rising rates. Now, of course, we have to also accept the fact that the level of national debt in every country, and the debt clock in the United States is just shy of $32 trillion. The central banks can only raise rates to a certain level before the governments themselves cannot repay the interest, forget the actual debt, cannot afford to pay the interest on that national debt. And we are pretty close to that. My own personal view was that I felt the Fed funds rate should eventually end at 5.25% to 5.5%, 25 basis points higher than it is now. We shall see if that occurs. The Fed is hoping they won't need to do that, though, as already mentioned, they've said incoming data will make their decision for them. Gold and silver prices have risen. Equity markets, though, have declined. And cryptocurrency markets have gone up a little. Let's take a look at the figures. Let's now look at the gold and silver price. And boy, did gold jump late yesterday, 11 o'clock in the evening. It actually peaked as high as $2,091, although that was, if you can see on screen, that was just for a very, very brief spell. I think it was a bit of a spike, but it's still trading at $2,037. It's fallen back a little bit, as you can see on the chart, and if we look at it compared to the week, we can see that it closed last week at $19.90, so it's some $48 overall higher. Silver is $25.61. That too rose, but a little bit later in the day. We're talking about 2 o'clock or 2:45 this morning. That's GMT time. And it actually peaked at $25.91, not quite reaching that resistance of $26. So we have silver currently at $25.61. Crypto markets are up, with Bitcoin now touching 29,000 and Ethereum $1,900. The market's up 1.34%. Equities, though, are down across Europe and the Middle East. The Euro Stoxx index is down 0.75%, and similarly so is the FTSE and the DAX and the CAC index. America indices closed yesterday, down 0.8%, 0.7 and 0.46 respectively in terms of the Dow, S&P and Nasdaq. However, it'll be interesting to see at what level they will open today. Okay, so gold and silver holders will be most happy and equity holders a little disappointed. But of course, we're only talking about the day after the rate decision. There's plenty of time to go before the equity markets start to rebound. Though, if we start to enter into a recession, that rebound may very well not occur. Now, before we conclude this video, I'd appreciate it if you would give us a thumbs up, subscribe to the channel, and of course press the bell sign. But meanwhile, I just draw your attention to Friday's employment figures in the United States, and also there are CPI figures due out next week. We'll also have the UK looking at its interest rate decisions on May the 11th, which is also next week. But in the intervening period, we have the coronation. Yes, the coronation of King Charles. And so because of the coronation, we will not be having our normal weekly update on Saturday. However, we will be producing it on Sunday. So as most eyes will be geared towards watching the procession and then the crowning of King Charles, we thought it appropriate to delay the video. So again, thank you for listening. Please give us a thumbs up, subscribe, press the bell sign, and we'll see you on the weekend, Sunday.